Did you know that the Arizona housing market has officially tidal back toward buyers? After months of seller strength, the tide is turning, and the timing couldn't be better if you've been waiting to make a move. The latest Comfort Market Index show 15 of the 18 largest cities are now shifting in favor of the buyers. Supply is rising faster than expected this fall, while demand is improving very slowly, still about 20% below normal. That imbalance means more room for negotiation, more price adjustments, and more opportunities. Especially if you're looking for the mid-range to the starting home segment, you are in good luck. Right now, we are seeing 5 sellers market, 6 buyers market, and the 7 sold buyers market. Overall, Arizona housing market is healthy but cooling, giving everyday buyers a long-weighted advantage. If you've been priced out before, this season could be your window to act. With all of that information, let's dive right into the most important information for today. After nearly 2 months of steady improvement for the seller, the trend has officially reversed. Why do I say that? This week, the Comfort Market Index show that 15 out of 18 cities that moving toward the buyers. Specifically, here's a number that you can expect it. Now, by the way, when I say favorable to the buyers, meaning the Comfort Market Index show that is less than 90 points. And if it is more than 110 points, it is in the seller's market. From 90 to 110 is actually in the buyer's market. Now, we are saying that 15 out of the 18 cities that moving towards the buyers favorable to the buyer doesn't mean that it is in the buyer's market. Specifically, let's talk about Fountain Hills, right? It's dropped 3%. Paradise Valley dropped 6%. Scottsdale dropped 3%. Chandler dropped 2%. Avondale dropped 10%. Now, that's a big drop for Avondale, I have to say, right? But overall, those are the cities that's still in the seller's market. Avondale is right now at 110, right there between the buyers and the seller market. So with this current rate, if Avondale, you don't have any, it's going to be very soon, the buyer's market very soon, right? That means 15 cities that moving favorable to the buyers. It doesn't mean that it is in the buyer's market yet, but it's still moving towards favorable to the buyers. The buyers has more negotiation power in those cities. Only 3 cities that moving favorable to the seller. We're talking about Tempe, we're talking about Gilbert, and Mesa. Now, out of the 3, the only city that's still in the seller's market is Gilbert, 116 points. Okay, Mesa is an imbalanced market, 106, and Tempe in a balanced market as well, 93.3, but very, very close to the buyer's market. The average CMI Comfort Market Index change this week is about 2.8%, negative 2.8%. So that's negative, meaning that overall the entire Arizona market moving toward the buyers. The buyer has more negotiation power. That means more negotiation, you have a better chance to get the things that you want, get the deal that you want. It's actually dropped from 1.1% negative last week. So that means this number is become more and more negative nowadays. It's already negative last week, and now this week is actually negative and even more negative. That means it's changing fast. It's changing to the buyers and in favorable to the buyer, and changing fast in favorable to the buyer. This is also the second consecutive week of momentum shifting away from the seller. What's driving the shift? Number 1, supply is still rising, and it's actually faster than expected in this fall. I think a lot of seller has been waiting to pass the summer, and at this time we have way more supply available on the market than expected. On the other hand, demand. And whenever we talk about the market, we have to talk about both supply and demand at the same time. Supply is rising, but the demand is not so much. It's like supply is driving a bullet train speed, and the demand is driving maybe a bicycle speed. Okay, very, very slow. It's actually still sitting roughly below the normal level of 20%. Okay, so it's not that much. Like I said, this imbalance means that the buyers want to have the upper hand, especially in the mid-range and starter home segments. I'll talk about that in a minute. Currently, overall, we have 5 cities in the seller's market, like I mentioned before. Fountain Hills, Paradise Valley, Scottsdale, Chandler, and Gilbert. Those are the 5 remaining seller's markets. 6 in the buyer's market, and 7 is now in the buyer's market. We talk about Maricopa, Buckeye, Crane Creek, Surprise, Santa Valley, Goodyear, Peoria, 7 cities. Honestly, at this time, we're expecting the same situation gonna happening until mid-November, when supply typically peaks. Because right now, more and more sellers are gonna put their house available on the market. So until before Thanksgiving, right, the supply is going to be going up before it eases down for the holiday season. So meaning there are not a lot of new houses available on the market. This situation, this distribution right here is very worth to follow, because we see right now, like previous couple of videos, we see the more balance, right? More like 6 of seller's market and 6 of the buyer's market. But now it's a little bit off balance already towards the buyer's market. And all the balance markets, most of the balance market also moving towards the buyers. Actually, most of the seller's market cities and balance market cities also moving toward more favorable to the buyer. So definitely continue watching that. Next, I'm going to talk about the luxury market. When we talk about luxury market in Arizona, that is when we talk about 1 million price point. The rise of Scottsdale and Paradise Valley. 2025 has been a breakthrough year for luxury market in Arizona. Scottsdale, okay? Scottsdale just overtook city in total home sale dollar volume for the first time ever. $6.34 billion year to date. That means Scottsdale could be more toward the end of the year, right? Because there's still 2 more months to close. Versus Phoenix, only 5.87 billion. Now, why is that matter? Because this is a stunning milestone, okay? Scottsdale market is now 8% when you compare between the two numbers, 8% larger than Phoenix, despite having, and this is fun fact, but true, half as many sales. Meaning is that there's way less number of homes that sold in Scottsdale, but the volume, the dollar amount is much more than all the Phoenix homes sold until this time of the year. And it's not just Scottsdale, by the way. Paradise Valley. Paradise Valley is also seeing a 30% year-to-date increase of the dollar volume. It is actually ranking right now the 5th in Arizona in terms of dollar volume. Okay, when I talk about dollar volume, that is the total of all the home price sold within the time frame. Right now, Paradise is number 5. For your perspective, real quick, Paradise Valley only have 332 closed listings, but those sales generated over 1.38 billion, more than Chandler or Peoria. Together, Scottsdale and Paradise Valley now dominate the Arizona luxury sector, driven by out-of-state cash buyer investing in high-end hedge style property. But the question is, how can Scottsdale and Paradise Valley get a lot of interest? This search mirrors what happened on Wall Street, actually, where a small group of AI stocks, very popular nowadays, like NVIDIA, are driving most of the market gain. Similarly, Arizona housing strength right now is concentrated at the top. But remember this, markets always moving toward equilibrium, okay? And in real estate, reversion to the mean is real. The luxury market has been shown that it's growing too fast, could often cooling very fast and very quickly as well. So watch out. If you are in luxury market, if you're looking for homes that want more than $1 million, be careful. That situation could happen anytime soon. With this kind of growth, with this kind of quick growth like this, is not sustainable. All right, next we talk about the home price. So here is the chart of 15 metro markets, where the price increase showing in the green and the decrease showing in the red. Obviously, you see, we don't have the exact number, but if you want to count, we kind of see in the middle, 50% of the metro area has an increase in price year over year, and 50% show a decrease. So that's pretty much the balance. The strongest gains in the areas where the inventory is still tight. A very small amount of inventory. We're talking about Cleveland, we're talking about Hartford, we're talking about Detroit, Chicago, New York, St. Louis, Baltimore. Okay, those are the area that has a very little amount of inventory houses, and the decline are mostly in the market that saw big price surge, 60-70% during the pandemic. Well, obviously, if you are in the market of Phoenix, Arizona, back then, you see a huge jump in price back then during the pandemic, right? Obviously, that's the reason why Phoenix now is kind of in not the leading metro area, but it's actually top 10 of the country, right? In terms of price reduction. And by looking at this chart, by the way, I'm gonna say to you this: we see no chance of crash right now. Because if there is crash, you're gonna see red throughout. Because the market normally behave the same. If the crash, okay, it's gonna happen everywhere, and it's gonna red everywhere. Now you say, why do you say the market behaves the same while we have some green and some red? Now here's the thing: it behaves the same. It's the function that depends on the supply. Where you see the supply do not have a lot of supply, still lack of supplies, available houses for sale, you see the price increase. versus where you see the price goes down like this is because there's a lot of supply available on the market. Overall, though, here's the good news. The national home prices are still growing, just at a slower, more sustainable increase. Inflation. We're going to talk about the inflation. Of course, you know the target that the Federal Reserve has for inflation is about 2%. We are nowhere near that yet. I mean, the nearest point maybe like 2.5. But we are not here. Now, in fact, we are on a trend of rising back up again. Right now, it's already at 2.9. But we kind of see that even though it is not at 2, it's kind of stabilized around 2.5 to 2.9, which is a good thing, right? Because I know that we're not reaching the target, but at least it doesn't change much anymore. That's one of the key data points of the Fed is watching closely and as is managed broader economic situation to make sure that, okay, we don't get the 2, but at least it's stabilized around the number that close to the 2, which is in this case, yes, it's close to number 2. What about unemployment? The rate remains relatively consistent, a little higher than the federal ideal level, but still stable overall. You see it's 2.6, 2.3, 2.1, 2.3 already for the last 4 months. A little bit stable right there. Okay, this balance between inflation and the employment continue to guide the federal decision moving toward. So that's the good news for the real estate market. When we already have like a stabilized inflation rate here, we have a stabilized unemployment rate right here, right? And we remember we also have a stabilized interest rate as well, mortgage interest rate. So everything is stabilized, even though it is stabilizing at a high level than expected, but at least it doesn't change. It's easy to know, it's easier to predict. But thank you so much everyone for watching today's episode. The overall picture isn't gloomy, okay? Far from it. In fact, the total dollar volume in Arizona is up about 7.6% year over year, with more homes closing and average prices up about 3.1%. That's a solid growth, okay? Even in a slow market, 3%, 3.1% is a solid growth. But here's the slip. Home above $2 million up 17.1%. Home below $2 million only up about 6.1%. In short, if you're looking for luxury home, the luxury market continues to carry the market while affordable homes are getting more affordable. And for most of the buyers looking for more affordable home, and that is the good news. Okay, but if you're looking for some like deep discount with a very good location, very good house, you're not gonna see that very often. In fact, it's very rare today. You have to sacrifice something to get a good discount in a good location. Perhaps maybe the house needs a total rehab and things like that. As we head deeper into the fall market, price trends are mixed by region. As you see, depend on the area, depend on metro area, depend on where you are in the country, depend on number of supply available. Available. Inflation is stabilizing, and although it's not at the target yet, but it's stabilizing, as I said, and the unemployment remains steady. So that's the overall market condition. My name is Longley, and if you're interested in receiving a weekly market update delivered to your inbox at your own time, feel free to scan the QR code above. Thank you so much. Bye-bye.